This is such an amazing turnout. I'm so happy that all of you could join us this morning. I know it's a busy week for everyone, and really happy to have you here with us. And especially thank you to Sadek and Nisha for joining us to have this, I think, what will be a really interesting conversation about. There's clearly such an urgent need that I think everyone in this room is aware of for building out the sustainable infrastructure that the Global South, and frankly the entire world, needs. And then there's this big question of how do we pay for this? And I think the work that DFC and I2 are doing together is a sort of model for a way of doing a public-private partnership to finance sustainable infrastructure in an effective way and try to get more capital going into these kind of important climate-related projects that are so urgently needed. And I wonder, Nisha, to maybe start with you, if you could just say a little bit about sort of where this collaboration or partnership originated, and I don't know if, to some extent, if DFC and I2 together maybe are strange bedfellows in some way, or if maybe this is a natural partnership, or maybe just tell us a little bit about where this came from.
Sure, and such a pleasure to be here with Semafor, that's doing just really phenomenal work in advancing critical issues. But to be here with Sadek, who is also just a real force in how he's looking at climate infrastructure and the Indo-Pacific, and it's been a great collaboration. But I'm going to back up just a minute and talk about the fact that why DFC was created, right? Which is in recognition of the massive gap that exists in financing for the infrastructure, the energy, the development and economic activity that increasingly countries are looking to. We know that public financing, public sources of financing, grant-based assistance, ODA, is simply not sufficient to meet the needs of emerging economies. We know that countries are falling behind on SDGs because they don't have sufficient capital. So when Congress created the Development Finance Corporation, it was to bring to the global market the US offering and bring the tools, bring the capital and the kind of de-risking that is necessary to really mobilize private sector investments to meet big global challenges. And so that brings us, in a sense, to today's topic and also to the collaboration that we have with Sadek and with I2 Capital. It really was born out of an initial investment that we had back in our OPIC days, looking at the Asia Fund. And as we started becoming more and more focused on kind of the climate aspects of it, the second fund came to being, in which a DFC investment of $300 million is part of an overall nearly $900 million fund that's looking at the specific ways in which we're looking at energy and infrastructure across the Indo-Pacific.
Mm-hmm. Yeah, right. Sadek, can you say a bit about I2's sort of thesis for sustainable infrastructure in the Global South? And we were talking backstage about some of the sort of obstacles or barriers that you might face in the absence of this kind of partnership. I mean, talk a little bit about how you kind of approach this space and the opportunities.
Absolutely. First of all, thank you very much for having me and for this extraordinary audience here. When you think about investing in infrastructure in high growth economies, whether it's in Southeast Asia, in Sub-Saharan Africa, or in Latin America, you want to look at the ability today to invest in infrastructure that ultimately not only has an impact in society, but is sustainable in the sense that the type of infrastructure that you make has the ability to be resilient from a climate perspective. We've seen over the last 2 years, for example, in the United States, where bridges have not been able to function because of an increase in temperature. We've seen an erosion of fundamental structures in buildings because of high water levels. All of these are due to fundamental climate change that is impacting all of us. So when we think about investing in infrastructure, we need to take that into account. So that is the basic thesis. The second element is, how do we look at investing in those economies where maybe the regulatory framework is not completely developed? or there is not enough critical mass so that people will have gone through trial and errors in how to go about investing and putting these structures together. Enters the DFC. So the DFC, which is part of the US government, is able to provide what I call important additionality, so that in some cases, the question is, would we invest without the DFC? And the answer is no, in which case the DFC is able to provide a huge impact, because thanks to their ability to come and partner with us, what would have been maybe $0 or $1 becomes 4 or 5. So you have that huge leverage that comes in. What ultimately is the role of the DFC? The DFC's role from our perspective is to be able to provide that capital, but also everything that comes with it, because the DFC comes in with its own underwriting, its own diligence, from an environmental perspective, from a social perspective, and that gives a lot of comfort to ourselves, to our partners, to our investors. And so what we look to invest in terms of our climate fund across Sub-Saharan Africa, Asia, Latin America, what is $300 million provided by the US government can become and will become $900 million on top of that. So you have over $1 billion that is going to be invested thanks to the role the US government is playing over the coming years.
Yeah, well.
I couldn't have said it better, and I hope somebody's recording this so we can send it to Congress, because as we get reauthorized to make the case for why this is so important for the United States and actually around the world.
Definitely, yeah, they'll be watching. And so can you say a bit more, Nisha, about, just to kind of cut through this jargon a little bit, when you think about sustainable infrastructure, I mean, what does that mean for you, and what are some of the sort of specific priorities? Are we talking about clean energy, or you know, what is it that sort of comes to mind for you? And I would love if there's like, if there's any case studies or examples of projects that you think are sort of illustrative of how this can work well. Yeah.
So just to kind of build a little bit on what Sadek was saying, as we think about our investments at DFC, we're organized around sectors. So we have energy, infrastructure, health and agriculture, and then support for small businesses and private enterprises. But across all of that, we have two major areas of focus. One is climate, and the other is inclusion, economic empowerment. How are we making sure that these investments are hitting the right communities and are being done in inclusive ways? But on climate, for example, I'm going to use an ICT investment that we have in Africa with the African data centers, right? Obviously, digitization is a huge priority, incorporating the digital infrastructure, and data centers are a key component to that. And yet they are a massive consumer of energy, massive intensive energy consumption, water consumption to operate one of these state-of-the-art data centers. So in working with African data centers, what we have tried to make sure that we're building into that is, one, how are we looking at efficiency so that we're reducing the energy consumption? Two, how are we supporting that with renewable energy? And then three, closed system on water, so that you're capturing the water that you need for the cooling and the running of the operation, so that you're not drawing on these resources away from other needs that the population has. That's a way in which you're ensuring that you're creating a resilient and sustainable infrastructure to support the digital economy needs, but in a way without creating adverse impacts on the climate
For the
side.
climate and emissions, right, exactly.
That's right.
And if I may, look, I'll give you other examples that are ones that we're working together. You're looking at renewable power. In the Philippines, we're looking to install 500 megawatts of solar power. 100 is currently being constructed. In India, there's about 1 gigawatt that is being developed and installed as we speak. Another is smart meters for gas and electricity. You want to have efficiency. You want to be able to have people pay their bills, the right ones, and not having a little bit of idiosyncrasies associated with that. What we've done together is install for over 30 million people in India smart meters, and manufacturing those smart meters in India. So we're using local technology, local manpower to be able to build that, and we're looking to build up to 5 million smart meters a year over the coming period. That's huge, and that's done all organically within the Indian economy.
Well, and Sadek, can you say too a little bit more about how you view your sort of risk and return calculus for this type of project, and especially when we talk about climate technology or sustainable infrastructure, sometimes these are innovative new technologies. Maybe they haven't been done a lot in other contexts. That could, some infrastructure investors might see that as higher risk than what they are normally comfortable with. How do you sort of approach your risk tolerance and what your expectations for returns for these kinds of projects?
So I think you should look at this as different risk-return profiles. So when you look at technology that can have a direct impact on infra-related type of assets, which itself has an important climate component, it could be energy efficiency, it could be the development of smart meters, it could be cybersecurity protection. So all of these elements are part and parcel of what you do. I think venture capital has invested a lot in all kinds of technologies over the last decade, and we've seen the benefits of that. But there's been less focus on technology that has a direct application to infrastructure. And that is what we're trying to encourage. That kind of risk profile would be very different than developing a renewable platform in India or in sub-Saharan Africa or in Latin America or wherever. On the other hand, once that technology is mature enough, then you can adapt that to the type of project that you're looking at. A simple example, mechanisms that move the panels up and down to optimize. Those mechanisms are being developed everywhere. Some of them are very successful, others less so. But once you have that critical mass, then you're able to quickly adapt and adopt these technologies into that kind of projects. And that's what we're looking to do.
Yeah.
No one is looking to combine both so that you effectively have more risk than you otherwise would have liked to.
And I mean, and from the return side of the equation, I mean, you're expecting sort of normal infrastructure type returns when you do these investments, or how do you think about kind of what your expectations are going into what you want to get out of it?
So the returns on a classical infrastructure project will be the kind of returns you would expect with the cost of capital that you would see for a mature infrastructure project, which of course will be very different than if you look at technology that has that ultimately looks to solve a climate issue that would be adopted to infrastructure. Those, of course, are more venture capital returns, but once they mature and they reach scalability, then you're able to, and commercialization, then you're able to adopt them at a very different profile.
And one of the ways in which DFC partners with funds is, one, it introduces efficiency for DFC in that the funds are able to then invest kind of at an earlier stage and work with these companies. Oftentimes that results in a more scalable opportunity for a direct investment in some of the portfolio companies as they grow, right? So we're able to work together to ensure that capital is flowing at an earlier stage and then also at a growth stage.
And Nisha, can you just say a little bit more about how, for this type of work, where these sort of projects are often originating? I mean, are you getting guidance from partners that you have in the countries where you're working here about what you should be prioritizing or what is needed in these countries? And I wonder if you could say it too a little bit about where you see the goals of a collaboration like this fitting into the bigger picture of U.S. kind of climate targets. And whether there's any, do you have any restrictions around, financing gas or fossil fuel projects at all through a fund like this?
Well, first of all, so we have a pretty broad intake valve in terms of how project ideas, project proposals come to us, both from a kind of policy perspective of what are the policy priorities that the administration is trying to drive towards, and our team will go off. We have a robust climate team that will go out and kind of look at alignment with that. But we also work with a lot of partners around the world to identify what are the priority opportunities, and then we diligence them to make sure that they're sufficient. So, so relationships will come through the business development that we do, but it will also come through USAID or the Department of Energy or State Department Climate Office. I know John Podesta and Dave Turk, for example, were just in India essentially doing a conversation about clean energy supply chain and how do we drive more investment into diversification of manufacturing for clean energy. I went in 2 weeks later and hosted a roundtable with a lot of the companies that are working in that space to say, okay, now how do we operationalize these priorities? How do we bring our tools to bear, whether that's the debt financing or, and oftentimes one of the most important things that we can do is to help de-risk investments, whether that's through our loan guarantees, our political risk insurance, et cetera, to bring these various investments to life. And we, yeah, so let me leave it there.
Right, yeah.
And I think the important thing is that it's mutual, right? In other words, we identify opportunities both through our existing investments. So we have an investment that has been installing rooftop solar. That investment was able to look at opportunities in Kenya because we have a partner that had on their manufacturing plants, we had installed the solar, and they said, come in and help us in our plants in Kenya. So think of it this way, investments beget investments.
Yeah.
And so when we look at an opportunity, we go to the DFC and say, does that make sense? Is that something that we can do? And they say, yes, this is very interesting. In fact, let me put you in touch with these partners. So it becomes a virtuous cycle.
Sadek has been a great source of new investments for us. And some of that is through, you know, companies that the fund will have invested in, and then they'll come to us and say, hey, we think these guys are ready for kind of a growth stage opportunity. I think we're working together in the Philippines on a couple of ideas. I think Hexa is one of them,
Exactly.
which is a renewable energy and energy efficiency platform. And often companies that have worked with us in certain capacity in a certain project will bring us either new ideas and new proposals, or they'll bring us new partners. And so that's another huge way of trying to expand. And then we work with governments, our host partner governments, so that, you know, I was in Sierra Leone just a couple of months ago where we were doing the groundbreaking on a power plant, but you know, working with, for example, MCC that is going in to really scale up investment in the renewable energy, and our investment in the gas sector was to really help bring the grid stability that will then allow the layering on of renewable energy on top of that.
Yeah. So I think we're out of time, unfortunately. But Sadek, maybe the very last word quickly. Do you have any? What would be sort of your exhortation or you know, ask from your colleagues in the investment community about how to get more capital going into these really important kinds of projects?
Never lose patience, because the fact is, to invest in high growth economies will take longer. But I think it has a huge value add from all perspectives. And so it takes longer, but at the end of the day, it's extremely rewarding, not from just an economic perspective, but from the sustainability perspective, from the social perspective, and we should not lose track of that.
Couldn't find a better way to end than that. So thank you both so much for
Thank
your
you.
time. Yeah, thank you.
Thank you very much.
Thanks, everybody.
Thank you.
Yeah.